Another area to look at in terms of the commodities is really a group called the Master Limited Partnerships, or MLPs. And basically, these companies are typically involved in the midstream energy business. Midstream energy would include everything from pipelines, possibly even tankers, to storage facilities for natural gas, processing plants for natural gas. They're not typically involved, although there are a few involved in the exploration and production side. But basically everything that goes from taking natural gas or oil from the wellhead to the consumer would be considered midstream. The problem in the United States right now that we face is that although we have plenty of natural gas coming out of these unconventional plays, there isn't a whole lot of pipeline and storage infrastructure in key areas that serve those plays. For example, the Haynesville Shale, which is located in Louisiana, near the Louisiana-Texas border. Very prolific play, maybe the largest gas field ever discovered and produced in the United States. However, there's not a whole lot of pipeline infrastructure there to get all that gas to market. Another area which is chronically short of infrastructure is the Rocky Mountains. If you look in the Rocky Mountains, you'll see that gas prices there tend to be as much as $1 or more less than they are in New York or in Henry Hub, Louisiana, which is the key trading hub in the United States. Reason for that is there's no way to get gas out of that region and to market. So a couple companies to look at there. One is a longtime favorite in personal finance, Enterprise Products Partners. Owns a wide variety of natural gas related infrastructure, everything from natural gas processing plants located in the Rocky Mountains to storage facilities located along the Gulf Coast to even a number of natural gas and oil production platforms in the Gulf of Mexico that are necessary to produce a lot of these deep water fields that have been coming online in recent years. Another one to keep an eye on is Kinder Morgan Partners, one that we hold an energy strategist portfolio. And we've recommended several times in personal finance. One of their biggest projects in recent years has been the Rockies Express Pipeline, which essentially will take natural gas from the Rocky Mountains east to the Pennsylvania-Ohio border. And again, Rocky Mountains natural gas prices are much lower than they are in the eastern part of the United States. Therefore, that's a hugely valuable pipeline for producers there. They can take gas that they could sell locally at a much lower price, transport it across the country and sell it at almost double the price in some cases. So that's hugely valuable for them. Another nice thing about these master limited partnerships is that they pay no corporate tax whatsoever, which means that they can pass through more income, more of what they earn, to you as shareholders in the form of distributions, which are much like dividends. One benefit of distributions from MLPs versus regular dividends is they're not taxed the same way. Typically, 80% or more of the actual income you receive from a master limited partnership will be taxed by the IRS as a return of capital. What that means is it serves to reduce your cost basis in the MLP, but you don't owe any tax on that money until you actually sell the master limited partnership, which means that you're able to defer 80% or more of your tax liability from the income you receive in an MLP. Another point to keep in mind is that under the new Obama budget, there are a lot of tax increases coming around. Even more recently, Obama's talked a lot about cracking down on corporate tax havens, which will probably mean that a lot of U.S. companies are exposed to that 39.25% U.S. corporate tax, which is among the highest in the free world. So one of the only ways to avoid that, one of the only areas that's left untouched, is the master limited partnership structure. Not only are they not subject to that 39.25% corporate tax, but you also won't owe income tax on as much as 80% or more of the income you receive. So it's a nice way of getting around some of these big tax increases that are coming in the future. So I think an area that's overlooked, underappreciated, and it will become more appreciated as these tax increases go into effect is master limited partnerships. And two to keep an eye on are Enterprise Products Partners and Kinder Morgan Partners.